Okay, we're going to go ahead and reconvene our City Council workshop. So welcome again, everybody. And next item is DS 17-096, receive briefing on final management audit report. And so with that, we want to welcome you guys. Mr. Grady.
Give a quick intro. Mr. Mayor, City Manager, City Council, and City Attorney. I hate to say it, but this audit is finally coming to an end, and it's been a lot of hard work on all sides. A lot of work on the City Councils up front and putting this together, and with the auditors and the staff throughout the audit. We've got here McConnell Jones, Odysseus Lanier, Darlene Brown, Gilbert Hopkins, and Nicole Durio, and they're going to take. Odysseus is going to give us an intro, and then we'll take you through the findings and recommendations of the audit.
I thought it'd be appropriate to stand up for the intro. So, first of all, I want to thank the City Council, and I want to thank everyone for giving us the opportunity to come in and take a look at the city's operations and financial operations and conduct this management audit in accordance with the guidelines outlined by the City Council up front. I must say, throughout this entire process, that city staff, everyone has been very helpful throughout this process. We went and looked at 15, 16 years worth of data, a challenge in and of itself. City having to deal with ongoing operations, having to deal with their core functions every day. And I will tell you that throughout this process, everyone has been exceptionally helpful, and I would like to give kudos and much appreciation to the entire staff for all they did. We just came through in Houston a very difficult hurricane situation. And let me tell you just how dedicated the staff was when we tried to do this. We probably needed another week on this report to make sure that we got everything done properly in this report. But guess what happened? The hurricane hit. And when the hurricane hit, Kathy Davis, Matt Grady, the staff, Karen, John Locke, everyone stepped up, and we worked all the way through this weekend to make sure that we got everything resolved that needed to be resolved before we delivered this final report. And I must tell you, at this particular point right now, as one that was personally affected by the hurricane, we didn't even think twice about trying to make sure that we did all we could to work with the city to meet this deliverable date. So I want to tell you thank you again, and thanks to everyone for everything that they've done. Right now, I'm going to walk through the intro and the summary, and then the way this is going to proceed is we're going to have introductions first, then we're going to go over the focus. We've already had those, and then I'm going to introduce the entire process, walk through the process, and then we're going to go through the individual focus areas. I want you to bear with us because you've just gotten the report, and this PowerPoint presentation basically walks you through the entire report. And then you can go back and read the report at your leisure. The report includes the management responses from the city. As with any of these types of audits, everyone does not agree. And it's good to agree to disagree. And in that particular situation, we have a couple of instances in which that has occurred, but we're all satisfied that we did everything we could do to get you the best quality product and most comprehensive product that we could get in the management audit. Slide, please. Next slide. Go to risk-based analysis focus areas, please. Hillary. Okay. As you know, we looked at 7 areas. We looked at capital outlays, scope period, 2006 to 2016 fiscal years. Use of bond money, scope period, FY 2002 to February of 2017. Interfund transfers, FY 2002 to 2017. Pay increases, June 2014 and October 2014. City owner agreements, FY 2002 to FY 2016 private roadway ownership, FY 2002 to FY 2016, post-recall spending, November 2011 to May 2012. And then we added for context and to be able to dispel any notions that the city was doing something untoward. We went and looked at we conducted a city financial condition analysis from 2007 to 2016. So we went through that as an addition on top of what we're doing in the regular report. Next slide. Our audit methodology. First thing we did, as you remember, we held the visioning sessions with City Council to refine the scope. We planned the audit, developed detailed programs and plans for each focus area. We conducted field work where we interviewed staff, observed processes, obtained data, reports, and documents. We went back 16 years. You need to understand how difficult the process that was. Some documents were not here because of records retention requirements. Other documents, for whatever reason, we may not have been able to locate, but this was a 16-year period, which never happens. That never happens. But we tackled it and we got through it to get you what you needed to get this audit done. Then we performed detailed transaction analysis and selected audit samples and applied detailed audit testing procedures. We looked at hundreds of transactions over this period of time and tested hundreds of transactions. So to get comfortable with our conclusions that we come to in the audit report. Then to make sure that our facts were correct, we held vetting meetings with all the city staff and management to make sure that the facts were correct in the report that we based our conclusions on, to make sure that the facts and circumstances were correct. That is the process. And then we released the audit today. Next slide. Next thing, we developed detailed risk assessments and audit plans for each area. We had to look at each specific area and analyze the risk and look at those areas and develop our plans to test those areas based on the questions City Council wanted answered in our visioning session. We interviewed current and former city employees to make sure that we had the appropriate context for developing our observations and findings. We obtained all the CAFRs from the city from FY 2002 to 2016 and analyzed all those CAFRs and what the impact would have been on the city's financial condition. We look at the city's detailed trial balance reports from FY 2002 to 2016. We reconcile the city's FY 2002 to 2016 detailed trial balances to the CAFR to make sure that we were dealing with the same information. We reviewed the city's budgets from FY 2010 to 2016. Next slide. We obtained and analyzed transaction reports for each of the 7 focus areas. Listened to audio tapes of City Council workshops held during those focus area periods. Reviewed city ordinances. Obtained and reviewed city and departmental policies and procedures. Selected judgmental samples for detailed audit testing procedures, and we obtained and applied these testing procedures to supporting documents and data files. As you can see, we did a deep dive into the city's financial records and transactions for these specific focus areas. Next slide. This is our overall conclusion, and I want to be very clear here and not equivocate. Although we determined that the general fund experienced deficits in each year, we can unequivocally say that no instances of fraud or abuse came to our attention based on documents city staff provided to us and that we tested in the 7 focus areas of this audit. That's our overall overarching conclusion. Now, as you walk through these focus areas, you will see some areas for improvement in terms of management practices, policies, procedures, and processes. But in terms of the overarching question that everyone wants answered, based on what we tested, no fraud or instances of fraud or abuse came to our attention in these areas. Next slide. The next area that's caused a great degree of commentary and controversy in the community. What happened to the $8 million? Well, let's talk about what the $8 million is. After we went through doing our audit, the $8 million was merely a projected budget shortfall. No one took any money. No money disappeared. No money changed hands. That was a projected budget shortfall. And this was based on a budget preparation methodology and not an actual monetary shortfall. This budget projection, as presented by the interim city manager at the time, did not reduce the anticipated expenditures to match anticipated revenues to balance the budget. In other words, what the interim city manager said was, okay, council, here is what the deficit looks like. These decisions are decisions you need to make in terms of whether or not you're going to cut costs or how you're going to balance your budget. That's what occurred. Now, this projection, though, the budget projection, was developed using the same methodology applied in prior years by prior city managers. And the methodology consistently budgeted higher levels of expenditures and revenues in anticipation of actual revenues being higher than anticipated and actual expenditures being lower. And by the time council got the budget, oftentimes it was already balanced. And the first time it was not done that way, it came up in this fiscal year 2016. So that's the budget shortfall. Keep in mind, it is a budget shortfall. It is not a misuse of money or funds. And if you look at the next slide, you can look at that slide. It will show you that the only fund since 2010, 2011 that did not budget annual operating deficits was the solid waste fund. Every other fund budgeted deficits. That's from confirmed data that came out of your budget documents. It came from the city budget books from that period of time, from FY 2010, 2011 through FY 26, 2017. So, what's the conclusion? Well, deficit spending in the general fund began in FY 2008 and continued through FY 2016. And these are decisions that are made by City Council and management on management recommendation. Between 2017 and 2016, operating between FY 2007 and FY 2016, operating expenditures in the city's general fund exceeded operating revenues by a cumulative $81.6 million before transfers. Now, once you transferred in funds from the enterprise funds to cover some of that, that cumulative deficit is reduced now to $3.1 million. And when we get into this report in the focus areas, the transfers are not inappropriate. The transfers coming in from enterprise funds are not inappropriate. Let me make that real clear. Cities do that all the time to try to balance their budgets. Now I'm gonna make sure that we walk you through each individual focus area, and I'm gonna have Darlene come up first, and she's gonna review the entire financial condition overlay of the city, and then we'll start getting into chapter by chapter the observations and conclusions and answering the questions the council had for each individual focus area. Want me to lead this for you? Okay.
Thank you, OD. Okay, well, so you guys have your conclusion. Now let's go through the details on how we came to that conclusion. So if we can go to slide 12, which is the governmental fund revenues and expenditures. What we did here is we took, as Odysseus said, the CAFRs from 2002 to 2007 all the way up to 2016. And we started looking at just where has the city been spending their money. Well, governmental funds comprise of your general fund, which is your biggest operating account, debt service, and then your other non-governmental accounts, which are not enterprise fund related. What this chart is telling you is the dark blue line is the funds that came into your governmental accounts, which are basically your total revenues. And then the orange line are your total expenditures. And so you can see that there's a deficit between your operating funds and your expenditures. The light blue lines are how was some of that funding made up. And most of it was made up through debt issuances. And that's not unusual for your governmental funds to do that, because that's where all your capital and all your bond money resides. And so we're going to focus on general fund in just a minute. But you see the spike in 2008. There was a $42 million worth of debt issued that year. In 2011, there was $57 million. And then in 2012, there was another $57 million issued. So that gives you a picture of the overall city's finances. The next slide shows you the revenue sources. The dark blue lines are your ad valorem taxes and your sales taxes. That is your largest funding source for operations. The bright yellow line, those are your transfers in, and as Odysseus said, that's not unusual because transfers in from enterprise funds help cover the costs that the city is incurring on their behalf, and so you're recouping those costs. If we can go to the next slide, please. In the governmental funds, your largest expenditures are the orange, and that is related to public safety, and that's what cities are about, making sure your citizens are safe, providing services to them. Your second largest expenditures, though, are related to paying down your debt. Okay. You can see that the debt has peaked and ebbed, those debt payments, as you issue your bonds. So we'll go to the next one. Next slide, please. This is the last slide where we talk about your general governmental funds, and this is your fund balances. And usually as citizens, you say, oh, and decision makers, we have a pretty good fund balance. You know, if you can look at 2012, well, it looked like you had $106 million worth of fund balance, which is looks pretty good on the surface. So what we did is we said, okay, how much of that fund balance can the city really spend? And that's what's in the green on your tops. So you can see that almost 50% of your fund balance in 2015 and 2016 you cannot spend because it's allocated to either capital projects or paying down your debt. Okay. So the next slide tells you why you can't spend that money. How is that money allocated? As you can see in the orange, most of it is for your capital improvement programs. And once again, it's not unusual that that would be allocated to capital improvement because you issue debt in order to make capital repairs or buildings. Okay. So again, nothing unusual here. Now if we go to the next slide, we're going to focus on governmental funds now. Governmental fund is where all your operations are funded from. All your, general fund. It's where basically your operations. It doesn't include debt. And it doesn't include capital. This is where you pay your salaries from. This is where you pay your just general expenses for supplies and overhead costs. Here is where you're really seeing the difference of where the city's not been able to manage their money very well. Your revenues, as one of the speakers just said, you guys have a revenue problem here. And so you've not been able to manage in the past your costs to meet your revenues. So this is just straight operating revenues and operating costs. Your source of revenues are in the colored columns, and your costs are in the green line across the top. So as you can see, in FY16, we had $81 worth of expenses, and we only had $67 million worth of operating revenues come in. So that created a gap. And if we'll go to the next slide. I just went down here too far. But the next slide will show you where the source of that gap was made up from. And it was made up mainly from transfers in. And the reason why we have transfers in, as I said, is to cover from your enterprise funds. But still, even with those transfers in, there was not enough money in 2014 and 2015. So the city had to spend down some of the general funds fund balance. In 2014, you had a $2 million shortfall that you had to use your fund balance, and the same thing in 2015. But then you tightened up, and in 2016 you had only a $400,000 shortfall. So things are getting better. Okay. If we go to the next slide right here, one way to tell if your enterprise funds are being used to support your general fund is to compare the percentage change every year in that the enterprise funds revenues that they're generating compared to the percentage change that their general fund is charging to the enterprise funds. So that's what these charts are telling you. Overall, the amount of money that's being charged back to the general fund is just proportionate to the amount of increases that these enterprise funds are incurring. So for example, on your top one, the solid waste fund, their charges to the enterprise, to the general fund, is 15% higher than the previous year, but yet their incremental revenue increase was only 3%. That's how you would read that chart. Okay, so if we can go to the next slide, please. This is the general fund, and the green line is your operating income. The orange line is your operating income, including enterprise funds, and then the blue line is your expenditures. So you can see that based just on operating revenue, you were not meeting your operating expenses. Now, traditionally, what we see in financial reporting are the enterprise funds in a lot of cities. The transfers in go above the line, what we call above the line, and that's where your operating revenues are because it's paying for operating costs. In your case, your transfers in for enterprise funds are below the line, below the operating costs. And so that's, if you had it above, reflected on your CAFRs, above the line, you would see this orange and you would not see such a deficit. Okay. If we can go to the next slide, this is where you're spending your money over time. Your public safety has increased, your expenditures from $28 million in 2007 to $50 million in 2016. On the surface, that looks like that's a huge increase, but your city has also exponentially grown, and so you needed those additional staff to help protect your city. So there's no issues there. If we can go to the next slide. These are some of the decisions, though, that the city has made in prior years that have had a negative impact on your fund balance. One of them is the COLA adjustment and increase in the pay adjustment that was approved in 2014 for civil service and citywide. That was a base salary, a total of $3.6 million per year. The other thing that we noticed is that we had 2 capital projects that were paid from general fund that would typically be paid from a capital projects fund or a bond fund. One was the Bunny Trail, and that was $1 million in 2011. The other one is landing at Clear Creek for $360,000 in 2013. But what, as city leaders, you need to be cognizant of is it's always good when you can get grant money, but there's a lot of ties attached to the grant monies that need to be considered in the long term. And you have received some grants for the police department staffing and fire department staffing that came with stipulations. And those stipulations are that you some of them you had to pay a portion of that grant fund, or you had to, one of the grants, you had to actually pay the salaries once the grant expired. What that's done is between FY17, which was last year, and FY21, you need to come up with $7.5 million to pay those salaries that were funded by grants. So in your budget planning, you need to be cognizant of that. And going forward, when you decide to accept grants, you need to fully understand what the future impact would be on your finances. General fund, now if we can go to the next slide. This is just a graphic of how your general fund balance has looked out over the years. You've gone from $22 million fund balance in 2007 to an 18 million fund balance as of 2016. You were at a high of 24 million in 2012. Okay, so now we're going to move on to enterprise funds. If we can look at the next slide. We did the same analysis for each one of your enterprise funds. And the airport fund has never made enough revenues, operating revenues, to cover their expenses, and that's not unusual. It's not unusual. The second chart right there shows out of the net position, which is similar to a balance sheet in simplified manners. Everything that the airport fund is tied up in capital, they have no money in their fund balance to spend. So your general fund is always going to have to support that under the current conditions unless they can raise more money. If we can go to the next slide. Solid waste is done a lot better, but over the past couple years, they have also not raised enough operating revenue to cover their expenses. Their net fund position, net balance position looks a lot better. There is some money for them, but it's all restricted to paying their debt. So they have no free cash flow either. If we can go to the next slide. Water and sewer fund. They have always been consistently making more operating money than their expenses. And they do have some money in their fund balance that they could spend if it need be. That's not tied up for capital or debt payments. If we can go to the next one. Same thing with the drainage utility. Their operating income has been higher than their operating expenses. And they do have more money in their fund balance that they could spend if the need arises. It's not tied up. If we can go to the next one. A summary of outstanding debt. The city's debt has increased from $73.7 million in 2007 to $208.3 million in 2016. So that's where as we saw earlier, a large portion of your tax rate is going to pay your debt. I'm going to have Gilbert Hopkins come up now, and he will talk about the capital outlay and then the bonds.
Thank you, Darlene. Thank you for this opportunity. Council, as Odisa said, I'd like to reiterate the cooperation that we received was outstanding, particularly in light of the disaster that we've just come through in our city, and I'd like to thank everyone who helped us during this very difficult process, exacerbated by the storm. So I'd like to take you briefly through the capital outlay and the bond money usage sections of the report. And let's start with, these are pretty much different sides of the same coin. Bond money is used for capital outlay primarily. So I'll go ahead and start with capital outlay so we can keep the order of the report. One of the first things that we did is we wanted to make sure that we understood what we were looking at, because the city defines capital outlay pretty much in two ways. There's, according to the city's policies and procedures, the capital outlay that has to do with things like fixed assets, furniture, fixtures, equipment. And then you have the big ticket items, things that we call bricks and sticks, which is your infrastructure, your streets, drainage and sewer, airport facilities. These are large dollar projects the city defines as greater than $50,000 with a useful life of more than 1 year. That was the focus of our capital outlay audit. And so when we looked at capital outlay, primarily it's bond funded projects. And the total capital outlay for the scope period, which for our purposes was fiscal year 2006 through fiscal year 2016, that 11-year period, saw the city spend approximately $298.4 million in capital outlay. Again, this is the big ticket stuff. And in 2010, there was a spike in the capital outlay, as the chart on the next slide shows you. If you look at the trend line from 2007 to 2016, you'll see a spike in 2010 of $46 million in capital outlay. That $21 million of that was contributed or attributable to the new police headquarters that the city spent money on, approximately $12 million. A new family aquatic center for approximately $4.2 million. Two new fire stations, Fire Station 1 and Fire Station 8, totaling approximately $5 million. And then various other water and sewer projects, totaling $8.7 million. And so when you look at that trend line, you can see where how the trends went up and down in terms of how the city spent money for capital outlay. Now, with respect to this section, we had several objectives, which I'd like to take you through and then give you a sense of how those objectives were met and what our conclusions were. The first objective with respect to capital outlay was to determine if fraud and/or gross management exists with respect to capital outlay. Now, let me give you a sense of how we determine that. Whenever there's an issue of fraud or there's a question of fraud, the first thing that we as auditors look for is we look for what we call indicators of fraud. You need to have indicators because not to have indicators would be similar to or akin to asking a fireman to come into the city and find the fire. Well, the first thing that the fireman is going to ask is, where's the smoke? If you can't identify the smoke, it's very difficult to pinpoint the fire. And so what we did is we asked those questions during our interviews for people to give us information about where they thought the smoke was, and more importantly, to provide information and evidence of that fraud if it in fact existed. And what we typically do during the interview process is we try and understand where the smoke might be, and then as we dig into the data and the facts and do our analysis, we attempt to corroborate what we were told. And we try to avoid running down rabbit trails because we don't have the budget to do that, which is why we ask for supportive data. We did, in fact, receive opinions about where fraud may have occurred with respect to specific projects. We included those projects in our detailed testing scope in order to look at, for those particular projects, the bid process, what occurred, the bid activity, looking at specific invoices, looking at proper authorizations, looking at canceled checks, looking at detailed information in order to ensure that the projects were conducted at arm's length and that there were no major violations of management policies and procedures. And in the course of our work, I can say, and echoing what Odysseus has said, we can say unequivocally that no instances of fraud came to our attention during the course of this work. And so I want to make that very clear that it did not come to our attention. What we can say, though, and what has already been said, is that there are structures of internal control, there are procedures, processes, and policies that we believe need to be strengthened and improved. Otherwise, there could be a situation where an environment that's ripe for fraud to exist could occur. And so in our recommendations, we make, in our conclusions and our recommendations, we make suggestions on how the city can strengthen its internal controls going forward in order to ensure that, to the best of the city's ability, the opportunities for fraud are eliminated or prevented or mitigated to the extent possible. Our second objective was to determine the reasons for the dramatic increase in capital spending between fiscal years 2005 and fiscal year 2006. Now, to provide some context for this particular objective, if you review the city's comprehensive annual financial report for those respective years, and you look at the capital outlay line, you'll see that there's a dramatic increase of overall 248% of the capital outlay costs in the CAFR. We were able to analyze the components of that particular overall increase, and we discovered that in the general fund, there was a 311% increase in the general fund capital outlay between those years. And then what we attempted to do, or what we desired to do, is to further disaggregate that general fund number for fiscal 05 and fiscal 06 to determine the individual specific line items making up the total for 05 and 06. That exercise would have allowed us to compare line by line the reasons for the differences in those particular lines, and then therefore determine the reason for the 311% increase between years. Unfortunately, we were not able to complete that exercise because we were not able to obtain the detail for 05 and 06 general fund capital outlay in order to make that comparison. Now let me be clear. The city provided trial balances for fiscal year 05 through fiscal year 2016. What we needed in order to conduct this analysis was what is known as the detailed trial balance with account groupings. Now let me tell you what that is. Typically, during an audit, the city will provide the auditors with a trial balance, which is a balance of all of the accounts necessary to prepare the city's financial statements. The auditors will take that information and will group it according to the categories in the city's comprehensive annual financial report. And then on top of that particular trial balance, they will also add audit adjustments. And that final product for the detailed trial balance with account groupings is what supports the numbers in the CAFR. That's the information we needed in order to conduct a thorough analysis of this difference. That information was not provided to us. It was not available to us. The information was outside of the city's retention period, which is defined by its retention policy. So it was not a violation, and let me be clear, the absence of this information was not a violation of the city's retention policy. It simply was not available. We asked the city to inquire of the auditors that were serving the city at that time to inquire if they could provide a copy of the detailed trial balance with account groupings. They provided a PDF version of the 2006 detailed trial balance with account groupings, but it was not in a format that we could use. We made the decision not to try and reconstruct the information that we were given for a few reasons. One is that we did not feel that it would give us the information we needed because it was only one part of the puzzle. We needed both 05 and 06. We did not feel that it would, in our professional judgment, that it would be a good use of our time to take the time to construct or reconstruct information that ultimately would not be helpful in us achieving our purpose. And so although that information was provided by the auditors, we did inform the city that it was not useful for our purposes and that we would not be able to use it to conduct the analysis that we needed to conduct. Now, what we did as an alternative procedure, let me be clear that the alternative procedure did not satisfy the objectives, but it did provide some additional insight. The city did provide detailed trial balances with account groupings for fiscal years 2008 through 2016. And therefore, we were able to look at the line items, individual line items, and review those line items that make up the general fund capital outlay caption. And we were able to determine that the overwhelming majority of those expenditures were not bricks and sticks bond-related type expenditures. They were capital expenditures that fit into the first definition of furniture, fixtures, equipment, vehicles, those kinds of things. There were very few bond-related expenditures, the largest of which was something called developer contributions of about $5.9 million, which represents the value of infrastructure that developers donate to the city. And then there were some other bond-related items that were fairly small. So that just gave us some insight into, at least for the subsequent years, we did not see where there were major investments of funds by the general fund for bond-related projects. That's the best that we can do with respect to this objective without the detailed trial balances with account groupings. And now my PowerPoint is gone. I don't know what to do. Okay. I don't know the passwords. I just move on. Okay. With respect to the next objective, objective number 3, how were capital projects financed? Bond issuances, federal, state grants, et cetera, et cetera. Our analysis of capital projects indicated that, as to be expected, the majority of these capital outlay projects were financed through bond funds. Full 87% of capital projects were funded through bond funds. That consisted of 61% proposed certificates of obligation, 21% for general obligation bonds, and 18% revenue bonds. Other capital projects that were non-bond related comprised 13% of capital outlay income, and these came from passenger and customer facility charges, which were for the benefit of the airport projects. Bell County child safety fees comprised 12%, and various contributions comprised 11% of non-bond funded capital outlay. Next slide. The fourth and last objective with respect to capital outlay: were there significant cost overruns or change orders due to renovations, et cetera? And our conclusion was that, based upon the projects that we tested in our sample, there were no significant cost overruns. And we also examined change orders associated with those projects, and we did not note any exceptions with respect to any change orders. All the change orders that we examined were in keeping, they were authorized, they were in keeping with the city's change order policy, and none of the change orders in our sample were we able to determine any exceptions that were notable exceptions to be reported. The next slide. We had some observations, and I'll just go through a few of these with you. One of the things that we noted is that the city does not have a comprehensive capital improvement plan, and this is one of the main things that we have recommended. The city has a debt management policy that dates to 1997. One of the main features of that policy is that the city have a comprehensive capital outlay and financial management plan for capital outlays. And we noticed that the city does not have that, and that was one of our recommendations for capital outlay. Also, the city does not have a dedicated design and engineering group responsible for overseeing all construction projects throughout the city. One of the things that we noticed during our interviews is that we had the fire chief, police chief, and other chiefs being responsible for building construction. And we just didn't feel like that was part of their core competency. The interim chief at the time, the police headquarters was built. His core competency is not in construction. And so we felt it best that those folks who are in the city who have the core competency for inspection should oversee construction throughout the city. Same thing with the fire chief. The fire chief should be responsible for putting out fires, looking for the smoke and putting out the fires. But we found that that was not the case, and so this supported a recommendation that within the public works group, there should be a dedicated group that when the city again engages in what they call vertical construction as opposed to horizontal construction, that you get people involved who are design, construction experts. And so that concludes my presentation with respect to capital outlay. I will now move into the other side of the coin, which is bond money usage. When you look at and I'll just kind of give you an overview, what we attempted to do with respect to bond money usage is to examine bond money usage from the city's most recent bond election, which is in 2002, and examine bond money usage from 2002 through February 2017. And during that period of time, we were able to sort of get our arms around all of the bonds that were issued during that period, and then any any bonds issued prior to fiscal year 2002 that had any transactions or transfers with bonds that were issued between 2002 and 2016, we pulled those into our scope as well. So you have two things. You have bonds that were issued between 2002 and 2016, 17, and then bonds that were issued prior to that time that had transactions with those particular bonds. And so with all of that, we found that there was $330.6 million of bond issuances during that period. 56% of that was comprised of certificates of obligation, 23% general obligation bonds, and 21% revenue bonds. This does not include bond refundings. These are original issuances. The next slide. With respect to the last bond referendum that the city had, there's a $64.3 million bond referendum, which the purpose of which was for public safety buildings and facilities, for streets, and for parks and recreation. The next slide shows bond issuances by year and by type. The story here basically is that the city issued the peak periods in which the city issued bonds over the last, since 1994, or actually since during the scope period, 2002 through 2014, and then including those bonds that were issued earlier that had transactions with the bonds issued during the scope period. The story is that in 2005, 2008, and in 2011 is when the city issued most of the bonds over that period of time. The next slide shows the bond issuances by type and the percentage. And again, as you can see, the general obligation bonds and certificate of obligation, the certificates of obligation percentage-wise was higher than other bond categories except in fiscal year 2013. And then this last slide, which is bond indebtedness, shows how the city's bond indebtedness has increased since fiscal year 2002. There's been a slight decrease since fiscal year 2014, but between 2002 and 2014, there's been a steady increase in the city's bond indebtedness. And I think that Darlene alluded to that when she spoke about the general fund. And then this next slide gives you sort of an overview of the bond increases by type. General obligation bonds have increased steadily. Certificate obligations have fallen off somewhat slightly since fiscal year 2012. And then revenue bonds have remained fairly flat during that period. And then finally what we did is we looked at bond debt. We said for each dollar of general fund, how much of that is for bond debt. And as you can see in this next slide on page 40, slide 45, that percentage has steadily increased. And again, this confirms what Darlene said, is that the debt service, the city's debt service, is putting pressure on the general fund. And so as we had with capital outlay, we had some objectives with respect to bond money usage, and I'll go over those and then I'll be done. The first objectives with respect to bond money usage were bond funds spent legally and for the purpose for which the bonds were approved. For example, were idle funds used for other purposes? In achieving this objective, what we did is we obtained copies of, well, first the thing we did is we got our arms around all of the ins and outs of all of the bond funds. What were the sources of funds? What were the uses of funds? And then we obtained copies of the bond covenants, bond ordinances, the CCMRs, that define what the purpose of these bond funds were. Why are we issuing these bonds, and how is the money to be used? Now, once we conducted our analysis, we did an assessment of the bond expenditures and the assessment of transfers, and then we did what we call a follow the money exercise, where we looked at from the date of issuance to the receipt of proceeds, followed those proceeds into the bank, ensuring that we were able to identify anything such as bond issuance cost, bond premium, accrued interest, those things that sort of bleed out before the money gets into the bank, and legitimately so. But we wanted to make sure that if the bond was issued for $30 million and there was issuance costs of, I'll just throw a number out, $50 million, that difference ended up in the bank. And then once we determined that those initial proceeds were in the bank, we then looked at the expenditures made from those proceeds. And then as of February 2017, 2017, based upon what was issued, based upon what was deposited in the investment account, based upon what was spent out of that bond fund, this much money needs to be left over. Let's go find that money. And we were able to, for all the bond funds that had remaining funds, trace that money to the bank. There were other funds that had zero left over, but we were able to see from the bond analysis that some of that money had been transferred out to other funds. And so what we said in particular in the bond money usage section is, let's go and find those transfers out. And let's equate the transfers out with the transfers in. Because if I take $50 out of my right pocket and put $50 in my left pocket, and I look in my left pocket, how much money should be there? It should be $50. So we did an exercise to try and equate the transfers in to the transfers out. And we were able to do that, except in one instance. And we do highlight that in the report. But let me say that in our attempts to do that, this does not mean that because we were not able to do it, that there was money that was missing. Because these transfers are, and I don't want to get too technical here, but it's not really physical money as much as it is what the city calls a claim on cash, which is a book transaction. And so what we were able to say is that we could not trace it because there was some incompleteness in terms of how the books were kept, or the report was prepared. And so we're not prepared to say that money is missing. We're just simply prepared to say that for that particular fund, we believe that there was just some accounting that didn't go correct on that. And so in determining whether the money was used properly, like I said, we followed the money, we made sure the money was in the bank, and then we assessed the use of that money against the bond covenant to see if it was spent for appropriate purposes. And here's what we found. Approximately $3.4 million in bond costs that were paid by bond funds during their scope period, in our assessment, did not appear consistent with the authorized purpose of the bond. Of that $3.4 million, $3 million was deemed to be inconsistent with the purpose of the bond. $240,000 was consistent with the purpose of the bond, and 3% was undeterminable. Now, to put that in context, that $3.4 million in context, it represents less than 1% of the $330 million of bonds that were issued. So it's a very small percentage. So I want to put that in perspective. I don't want people thinking that, we've lost $3.4 million in money, and the city has. But in terms of our assessment, that was the total that we determined to be based upon our review of how the money was spent and how the bond covenant said it should be spent. It was not spent in accordance with the purpose of the bonds. And then we looked at bond transfers, and we found that $13.4 million of bond transfers were in fact consistent with the purpose of the bond making the transfer. So if you had a bond, for example, that was issued for streets, and they transferred that money out because that bond was over, they transferred to a fund, another bond fund, whose purpose was for streets. So that was consistent. There was one instance, for example, where bond money was transferred from a bond, say for streets, it was transferred to a water and sewer fund. We didn't consider that to be consistent, and so we highlighted that. So that's the kind of thing that we're looking at here. And so $488,000 did not appear consistent of transfers, and $3.2 million we deemed indeterminable. Now let me make a distinction here because I don't want anybody to be confused. In the first instance, we're talking about bond money spent. In the second instance, we're talking about bond money transferred. Okay, I want to make that distinction. The second objective, or the next objective with respect to bond money, were remaining funds after project completion, if any, used appropriately and legally. And this is sort of a similar question as the first. And we noted 2 bond funds with a total remaining balances of $488,000 that were transferred to other funds that that in our assessment did not appear to be consistent with the purpose of the bond. And so that's where we are with that. Now, with respect to observations, the city's debt management policy that was implemented in 1997, we are recommending that it be updated. Things have changed, conditions have changed, the city's financial condition have changed, bond markets have changed. The city's policy needs to be updated and revised. As we said during the capital outlay presentation, the city needs to adhere to the major components of its debt management policy, primarily the capital financing plan and a comprehensive capital outlay plan and financing plan. And then also the city needs to ensure that when it does build capital outlay projects, that it also includes in the budget a maintenance component. Because once you get that building up, or once you get that street built, there's a need to maintain that. That also needs to be folded into the city's planning. And we think that that needs to be institutionalized in the city's debt management policy. That concludes my presentation on capital outlay and bond money usage. Thank you for your attention.
Okay, so now I'm going to walk you through the interfund transfers. This will go much, much faster. Need your login though. So I can talk through the slides while he catches up. So on interfund transfers, we've spoken a lot already about interfund transfers. So if we can just go to the next slide, please. This just gives you a comparative analysis of the trends from interfund transfers by by purpose. So your franchise fees have been pretty steady, and then this is the top left, and then they've increased in 2015 and 2016. Same with indirect cost allocation, and an indirect cost allocation is where the city incurs costs for overhead, for example, for your purchasing department, your finance department, your legal services, all your overhead costs, and then you reallocate those back out to the enterprise funds so to help offset those costs, support costs. Then we had a large spike when the fleet management program got underway, and then others have been pretty stable. So next slide. Our first objective was, were the transfers authorized? Our conclusion is that the city charter authorizes the city manager to initiate transfers and doesn't require city council approval. Therefore, they have not been consistently presented to council for approval or information purposes. So they weren't necessarily authorized by council. Some of them were, especially related to bonds, but other transfers are included in your budget, and it gets authorized that way. There's no separate presentation. The second question was, were transfers from restricted funds allowable and legal? Well, the accounting standards do not disallow transfers, so they are allowable and legal through accounting standards. Your city does not have a policy for enterprise funds in which to say you can or cannot transfer funds. So there's no criteria to judge that against. And even if you did have a policy on enterprise funds, a policy doesn't determine legality of a transfer. It does apply the allowability principle. The third, objective 3, are city policies governing the interfund transfers adequate to prevent misuse or misallocation of restricted funds? Our conclusion is that they are not adequate to prevent future misuse or misallocation of funds. You need to develop some strong policies on your enterprise funds and your transfers. And not only with the enterprise funds, but just when you are doing a transfer, there needs to be a policy on what documentation needs to be used to support that transfer. Okay. Next slide, please. So we answered the questions. Now we do have a couple of observations. One of them is that the accounting principles, GASB, require certain information to be reported in your annual financial reports, and it's a detailed discussion of why you were transferring funds. Your financial statements don't have this discussion. They just have a schedule of the amounts that were transferred. So our recommendation on that is going forward, you need to ensure that that discussion is included in your financial statements. Our second observation for the next slide, please, is your transfers fund from enterprise funds to general fund are based on budgeted amounts. They're approved through your annual adoption. But what does not happen is at the end of the year, did our budget, actual expenses meet our budget, and then make that adjustment. So we went back and we calculated what the transfers were compared to what they should have been based on actual expenditures. And so for 2015, if this true-up had been performed, franchise fees would have been $149,982 less to the enterprise funds, but the cost allocation should have been $2.2 million more to the general fund. In 2016, the franchise fees should have been $178,000 more, and cost allocation should have been $622,000 more. So our recommendation on that is perfectly fine throughout the year to be making these transfers based on budget. But at the end of the year, you want to do a true up to make sure that the general fund really received all of the costs that they should have. The other thing that we noted was that right now there's a possibility, and we did see a few instances where the enterprise funds are getting double charged because of the indirect cost allocation. And this is mainly with respect to the information technology purchases. So the indirect cost allocation already includes a component for information technology support. But if a piece of equipment or some software is purchased, they actually also get charged back their portion of that. So they would, in instances, get charged twice. And we have, in your report, provided you a detailed example of how that works. Okay, so we will move on to pay increases now. For pay increases, what we did is we obtained the salary files, payroll files for that the year 2014, 2015. We actually analyzed every singles employee's pay rate changes for that 2-year period to make sure that the pay rate change was either related to the specific COLA, 3% COLA that was authorized in June, or merit increase based on their performance evaluation, or in the case if they were civil service employees, that it was related to the 8% pay adjustment. And what we found in that analysis was that everybody was paid correctly. There were a few exceptions into the actual calculation that were very small. We have those details in your report. But nobody received pay increases that should not have received pay increases, with the exception of, on the 8%, there were 2 people, and 1 person returned the pay increase, and the second person is no longer with the city. Okay, so everything was applied correctly there. So the first objective was, what was the short-term and long-term planning for the 3% citywide COLA? Our conclusion is that there was no long-term planning on the pay increase. You were presented a 4-month projection on how much it would cost. That projection was $547,000 to finish out the rest of the year, and then in 2015 it would be absorbed into the budget. So the actual cost for that was $1.9 million in the 2015 budget, and that included your benefits. If we go to the next slide, it's the same analysis, only it was for the 8% pay adjustment for your civil service employees. Again, there was no long-term planning on that. We calculated it to be $2.6 million impact to your general fund. And then there was also, we listened to the types, and we looked at the compensation consultants report. And there was some discussion around whether it should be a 5% pay increase or a 3% or an 8%. Various scenarios were presented to you. There was a lot of discussion on the audios that we heard. The compensation consultant's recommendation was a 5% increase because the 3% had already been received. The vote was for an 8%. So in our opinion, that the 8% pay raise adjustment that they did receive equated to an 11%, and that was not the original recommendation. Not saying that they weren't entitled to it, because we all know they all work hard. We're just saying these were the facts. The next one, pay increases. Were staff pay increases paid retroactively? Our conclusion is yes, they were paid retroactively. The 3% was applied to 2 weeks prior, and the 8% was not paid retroactively. But in doing this, in our analysis, we also took a sample of 75 other employee pay raises based on merit increases. And the city does have a process in place. It's been around forever, where if you're an employee and your anniversary date is March 1st, but for some reason your supervisor does not get your performance evaluation in until June, your pay is made retroactive to March 1st. It's fair for employees. However, state statute does not allow that unless you have a policy in writing that says you will do that. The city did not have one. They revised a policy during, I believe it was August, maybe September, August of this past year when we raised that question. So in those prior years, you possibly were not in compliance with state statute on paying retroactive pay. The fourth objective was on the pay increases. Were budgeted funds for the 3% COLA and the 8% pay adjustment used to hire additional FTEs? The city, just like everybody else, has one bucket of money for salaries, not one bucket dedicated for salaries and one bucket dedicated for pay increases and another one for new hires. So we weren't able to tell if those specific funds were used to hire new people. But what we did is we took the information in your annual financial reports. There's a statistical section on the back that tells the number of employees by year. And that's what this chart is. It tells you the number of employees by year and the annual payroll by year. And so during that period from 2014 to 2015, there were 31 additional employees hired with the city. During the period of 2010 to 2016, your payroll went up by $10 million, I think it's $10 million, and your employees went up by just a little over 100. So not very many employees, even though you've been growing. The next question, were there positions with changes in job classification in addition to the pay increases? So again, we went back to our 100% testing, and there were no position changes related to the pay increase. We noticed that one employee did have a job title change, but that was based on their performance evaluation and not a pay increase. The last, we had an observation with the pay process. And that is that when staff is presenting a request to you for the annual merit increases or special COLA increases or pay adjustments, they need to present to you what is the long-term impact on your general fund or whatever particular fund that they're presenting and requesting the pay increase for. Okay. And that analysis not only is base salary, it should include the benefits and some estimation of what the overtime impact will be too, just based on historical. Next slide, the additional observation we had is to develop a specific policy on when and under what conditions the city will pay retroactive merit increases or any kind of pay increases. So Nicole has to wake up now. She gets to come and talk about city owner agreements, and then she'll talk about roadways.
Good evening. I'm going to be talking about the city owner agreements and roadway ownership. The city executed 61 city owner agreements for the fiscal years that we looked at, which was fiscal 2002 through 2016. And the total cost to the city was $14,050,836. Objective 1 is the city's participation in city owner agreements keeping with best practices. And our conclusion was the city's participation in city owner agreements is based on the Code of Ordinance, Section 26.85, which governs the process. However, we noted the city is not following best practices that are listed, which relate to assessing the cost benefit of the prospective city owner agreement, maintaining a better database of all city owner agreements, and establishing criteria for auditing owner records. And what we mean by that is the city council may approve a city owner agreement for oversizing in the amount of $600,000, and the city pays the invoice that gets approved, but they never go back to the owner records to see if $600,000 was paid or $550 or the like. And so we thought that would be a best practice. Objective number 2. Did the city pay amounts over the existing approved city owner agreements? No, the city did not pay amounts over the existing or original city owner agreements, but we did note 2 instances where city owner agreements were not budgeted or allocated and they were paid for from the general fund. Those 2 agreements were Goodnight Ranch Bunny Trail in the amount of $1,003,036.03, and the second one was the landing at Clear Creek, Phase 3, in the amount of $360,366.68. Question 3, or objective 3 rather, is the volume of agreements disproportionately high? Our conclusion was the city executed 61 owner agreements, as we stated before, which is an average of about 4 per year. So we did not think that that was excessively high or abnormal. The final objective is, were city owner agreements limited to developers or were they open to all developers, and was there a pattern? Our conclusion, city owner agreements are open to all developers, but we did note that there were primarily 4 developers that participated in about 60% of the 61 owner agreements that were executed during our scope period. I'm on slide 70. The observations is, while the city has plans for thoroughfares, water and sewer and drainage, the city does not have a specific long-range plan that includes the strategic execution and timing of city owner agreements to accommodate the city's rapid growth and associated infrastructure needs. So our recommendation is that the city manager, in consultation with city council, should develop a long-range plan that includes the strategic execution and timing of city owner agreements to accommodate the city's rapid growth and associated infrastructure needs. And this should also be included as part of the long-term capital improvement planning process. Another observation that we had is, in looking at 4 of the city owner agreements, it appeared that the owner agreements may have been executed prior to approval by city council, and that is because the owner agreements do not include dual execution dates. And so if dual execution dates were included in the city owner agreements, it would be easy to determine whether or not those agreements are in compliance with being approved by city council rather. Moving into roadway ownership, there were three objectives related to roadway ownership. The first objective, compare the city's roadway ownership and city participation to best practices to assess the overall efficiency of the city's arrangements. Our conclusion, the city of Killeen does not have formal policies and procedures in place to monitor roadway ownership. Secondly, city staff perform cursory reviews and adds or removes roadways based on the best knowledge of professionals performing the cursory review for roadway ownership and related maintenance plans. And the final, the city does not adequately assess county roadway annexations before requesting authorization from the city. Question 2. At what point was the city authorized to spend money? Were funds expended before the city owned the road? We noted 4 instances where monies were spent prior to ownership of the city of the roads, and those total expenditures came to $7,265. They were related to Bunny Trail, Reese Creek Road, Bell's Loop, and Kilpatrick. The third question is, what are the monetary obligations for the roads? Our conclusion was the city does not incur costs for annexation. However, the city does have future obligations to repair and maintain annexed roads and upgrade them from county to city standards. And what we noticed is that 2 roads that were annexed in fiscal '04 and fiscal 2008, the city incurred approximately $10.5 million on widening and reconstructing Tremere Road, and also $17.9 million on the reconstruction of Stagecoach Road. Our observations relate to a lack of formal policies and procedures, and also not adequately assessing county roadway annexations before requesting authorization from City Council. So because formal operational due diligence reports are not given, it has not historically been brought to the attention of City Council that we're going to annex this county property, and it includes XYZ roads, and these roads are going to incur XYZ costs for upgrading them to city standards. So that has also put a burden on the city budget. At the time of annexation, the city council does not provide, or the city, rather, I'm sorry, does not provide city council with estimates of the cost to maintain the annexed roads or how the city intends to fund the roads. Therefore, these costs are not considered in the annual budgeting process. The city does not execute formal agreements related to its annexation of county roads, and the city does not develop long-term plans to assess and evaluate upgrades to the condition of annexed roads to meet city standards. Now we'll bring Darlene up for our last portion, post-recall spending. Thank you.
Okay, we're coming to the end, and I feel like that little jack in the box where you wind it up and, up and down and up and down. But last sections now. Post-recall period spending. We will go to the next slide, please. During the 6-month period, the city incurred $111 million worth of expenditures. So of those, the 41 million were salaries. There were 19,360 transactions. So what we did is we broke out that $111 million into different types of buckets. And I'll show you a chart on that. But the first objective was an emergency declaration declared? And our conclusion is there was no emergency declaration declared, but it's not common practice to have a recall. There's nothing in statute, there's nothing in rules that say you need to declare an emergency. However, the city manager at the time did issue a memorandum to all staff on how they should proceed with their purchases. And then we verified that the purchases did follow those procedures. Okay. This next slide, please, breaks out that $111.7 million. And as I said, 41 were in salaries, $15.9 million of over 98 transactions fell into the $50,000 and above per transaction bucket. Out of those, we took and we sampled 67% of those. And we also tested transfers, which were the less than zero bucket. We tested expenditures that were between 0 and 3,000, and then 3,000 to 50,000. So we made sure that we had a slice from every bucket that there was. And in total, we tested over 35% of your transactions for $9.4 million. We did not find any indicators of fraud or abuse based on the information that we were provided. Which leads us into the next objective. So was there any evidence of fraud or abuse of funds during this period? And our conclusion is based on our audit procedures that we applied and the documentation that we received and tested, we do not believe that we saw any indicators of fraud or abuse during that 6-month period. However, what we did see overall, and as what you've heard throughout this presentation, is that there's a weak internal control environment with this city that could lead to fraud occurring and not being detected. So in your report, we've given you a lot of recommendations to strengthen those internal controls. And I'm going to wrap up in a minute talking about the internal control environment. So our last objective on the post-recall was what is the process now and our procedures, contingency plans, and frameworks in place for the future? The process is that the city follows their purchasing procedures. Anything that's $50,000 and above does come to you for approval through the CCMR process. There is not a contingency plan or framework in place in the event that a full city is not seated, and let's hope that that never happens again. But you're not unusual. Cities don't have these because it doesn't usually happen. Next slide, we've talked about general weak internal control environment, and one of the things that came to our attention was that you have some departments that have been running a set of books outside of the city's financial system. As soon as it was brought up to the attention to the city manager, they were closed. But those books have been open for years. So that's part of the weak internal control environment. And these departments were the aviation department. They were using it to track expenditures. You know how you have your car rental facilities and your concessions. So they were tracking those expenditures in this set of books and then issuing out their invoices to their their concessionaires. And then the concessionaires were paying the aviation department, and then that money and the information was getting back to the city to enter into their financial system. You had the Civic Center and Conference center that using set of books to track the alcohol sales the same way, volunteer services, senior center, and cemetery. Now, those have all been closed, and so everything will now start flowing through your financial system from the start. Now, that's not to say that the information did not end up in your financial system, because it did. It's just until it got there, it was in another set of books. Okay, our next observation with post-recall period spending was that a lot of employees have procurement cards where they can go out and make purchases on the city's behalf for city needs. The purchasing department receives, and they go online and receive a detailed transaction list for that week prior. Well, and then they reconcile it. But they're not keeping that detailed transaction list. They're just keeping their final reconciliation report. Okay. And then our last one with the post-recall spending is that the records for journal entries to move expenses from one fund to another and to the correct department and division that has where the expenses has recurred does not always contain the full supporting documentation that you would expect to see, which would be copies of the original purchase order, copies of the original payment, receiving documents. In some instances they were there, in some instances they were not. So if we could go up to the next slide, please, and this is where we are going to wrap up this report. So you've heard a lot of what's happening, and it sounds very, very negative. But when you take this deep dive that we did over a 16-year period, and our focus was to tell you if fraud or abuse occurred. So that's why it sounds negative. But I must say, your staff are doing an amazing job. They grew through a city that was a small town. They've had to experience this growth. They've not really had the policies in place that they needed to be able to make these effective decisions. So although it sounds negative, you've got a good team in place. But internal controls are based on policies, which you've heard and you will see in your books, that you're lacking a lot of key policies. They're based on processes, technology, and people. So I'm going to walk you through some of the things that we've seen. Policies you've heard already over and over again, that you need to have detailed policies in place that define what the expectations are. They have to be detailed enough to provide criteria and a basis for decision making, and they have to be reviewed and updated on a regular basis. We found, and we've pointed out to you, where many key policies have not been developed in this city. Next slide, processes. Processes must be in place to ensure accountability, compliance, accuracy, transparency, and efficiency. And the processes are dependent upon policy. So if you don't have the policies there, your processes are probably going to be weak also. And we did note that. There's been a failure to maintain some documents and the data according to the state and your city retention policies. But for the most part, all the documents we requested were there or available. Some departments, as we stated, had their separate accounting records. When this new finance team came on, there was frequently new accounts added to the system because there was not an understanding or couldn't figure out how prior account codes were being used, so just created a new account. So as a result, you have this huge chart of accounts that's really convoluted, and it's possible that one of those accounts could be used for some malfeasance, and it wouldn't get caught because you have so many accounts. And then, as I've pointed out, the journal entries are not always supported with the detail. So we go to the next slide, please, and we'll talk about technology. Technology is the foundation of how you can operate. So it includes your hardware and your software. And you have to have the appropriate hardware and software in place so you can be effective and efficient. And your financial software must ensure that your transactions can be complete, accurate, and they have to provide for audit trails. And they also have to provide for segregation of duties so that the same person that's requesting a purchase can't approve that a purchase and then make payment on it. There has to be a strict segregation of duties. So what we noted is that your financial system is running on an old platform. And because of that, there are space limitations. And because there are space limitations, the data is not always kept as much as you would want. The capabilities of the system, it's a good system. It needs to be updated. But your team are not using all of the capabilities because they've not had the training to understand what the system can do for them. They're learning. And as a result of not really understanding the system and some of the limitations with it, there's a lot of workarounds been designed. And most of those are Excel spreadsheets where you're generating reports or compiling reports that are not pulled directly from the system. So you're pulling the data out of the system, and we all do it. You pull your data out, you make your full formulas and everything. But that's not a good way to run a lot of these things. And then lastly, although your system can set up these segregations of duties, it has not been done. So there needs to be some segregation of duties built into the system. If we'll move to people. So as I said, you have good people in place, but in order to have full internal controls, you not only have to have the right number of people in place, but they also have to have the experience and knowledge in order to be able to do what they're being requested to do. Now, this engagement was not focused on analyzing your staff, but what we did notice is that you are a large city now, and you're continuing to grow. So the city needs to make an assessment of their people that you have in place, compare it to the skill sets that you need to grow this city for the future, and then determine where you're going to get those skill sets. Can you develop them from staff you have, or do you have to go outside and get some additional skills? Now, I'm not saying that your staff in place, they're not bad people, they're good people, they do have knowledge, but you need more people, and you need more people with the right skill sets to get you where you want to be. Okay.
Okay, we'll move to entertain questions right now, but I want to tell you that after going through this management audit, I think the council and the city staff and Ron, you have a golden opportunity to drive a stake in the ground here and look forward to the future as to how you're going to go forward in the future, and make sure you put the policies, procedures, practices, people, technology in place to be able to continue the growth and support the growth that you have in the city right now. So I'll sit down, and then we'll take any questions that come up from City Council. Thank you very much again for the opportunity.
All right, thank you very much. And before I open it up for questions, I just want to make a couple of comments. I think that my thing as mayor, it's always been to make sure that there's no fraud or abuse has occurred. I think that that was the main purpose. And I for one, want to say I appreciate it, all the procedures and processes and stuff that need to be in place. And I think that we do have a new city manager that is going to take, that seriously. And I think that we have a council here that is adamant in making sure that, all our policies and procedures are taken seriously and put into place. And in a minute, the city manager is going to respond to that. But I just want to say that I hope, as mayor, that this city audit and all that, as a city and all that, we can finally take the final step and put this behind us. I know that this is not the ultimate. I think as a city, we're always going to need to look at ways to improve processes and stuff like that. So it's not the end, but hopefully it's the end of where we lost this $8 million. And I think that's what the citizens really wanted answers to. What happened to our $8 million? And by what you did today, I mean, it put it into perspective as to what really happened to it. And it just challenges us as the leadership to figure out ways to continue forward in finding ways, because this city is going to continue to grow. And we are going to have shortages. And it's been pointed out here many times, the shortages in revenue. Our expenses just keep coming up. And we don't want to have to go through this again in sometime in the future. But so I just want to say that I appreciate what you guys did. And with that, also my hearts and our prayers go to you guys, because I think, I'm not sure if all of you live in Houston, but you all live in Houston, and we are there with you, and not only with you, but all the citizens of Houston. We appreciate you making the trip down, and for some reason, it came to the benefit. There's an extra week there, so it helped you out. It helped us too. And with that, I'm going to go ahead and open up to questions. Mr. Kilpatrick.
Thank you, Mr. Mayor. I don't have a question, but I do want to emphasize from my perspective that everything that you pointed out to us, we take very seriously at heart. There were no negatives, they're positives. And that's how I'm going to pursue this, is everything that we saw a shortfall, everywhere we saw we needed improvement. We're going to dedicate ourselves in the next 6 months to ensure that we establish those measures to ensure that what the citizens have paid is they're going to get the results to ensure that the outcome is a positive outcome. And sir, to you and your team, appreciate your candor, appreciate your professionalism, and working with y'all. Thank you, Mr. Mayor.
Mr. Okry.
Yes, thank you, Mr. Mayor. I just have one question in regards to, first of all, thank you, OD and the MJ crew, for the work that you've accomplished, what we asked you to look at, and even through the Hurricane Harvey, you came through and you delivered us a product tonight, which we were all receiving. The question I do have, it deals with the bond funding. Was $3.4 million from bonds 2002 to 2016, where it was $3.4 million. And then it also highlighted fund number 529, which was $3.2 million. So that's a total of $6.6 million. My question is this: that $6.6 million that you identified, did that contribute in any way to the FY 16-17 projected $8 million was it deficit, or the deficit shortfall, the $8 million shortfall, or we're just talking about did that have anything to do?
No, I don't think it had anything to do with that. I'll let Gilbert address that directly, but that didn't have anything to do with the $8 million shortfall.
No, Odysseus, can you hear me? Odysseus is correct about that. The two instances that you referred to, the 3.4 million and the 3.2, are totally separate issues. The 3.4 million has to do with expenditures, bond expenditures that we looked at that were charged to or spent for operations. Okay, the caption was operations, and our initial impression was that bond fund, we needed to look a little deeper into why bond funds are being used for operations rather than bricks and sticks. And so that was $3.4 million of bond funds. So that didn't contribute. This was a bond fund. It wasn't a general fund expenditure. Then the 3.2 million, that had to do with our effort to, as I gave the illustration of putting $50 from the right pocket into the left pocket, that had to do with our attempt to reconcile transfers in to transfers out. Fund 529 was the fund that I mentioned that we could not reconcile. Money coming out of Fund 529, we expected to see that money going into the other two funds, and we could not reconcile that difference. So that didn't have anything to do with the...
And a follow-up question, it had to do with FY 2005-2006. I can't think of it right now, but I'll let you know what it is. But the follow-on question to that deals with the use of certificate of obligations versus general obligation. Is it normal, or is it out of the ordinary? My understanding of certificate of obligations are issued for things that are specific to the operation of the city. Those you mentioned, there were three fiscal years there where it seemed like we did a lot of there were a lot of usage of certificate of obligation. So in your opinion, or in your research and looking at that, is that out of the way to have it was some numbers there, but was it out of the ordinary for a city to issue certificate of obligations versus some of that expenditure, taking it, putting it on a ballot for the people to decide, should we spend the money with general obligation?
Well, I would hate to, at this point, say, whether it was appropriate or not. I think that the folks who made those decisions, made those decisions based upon the facts that were in front of them at the time. We wouldn't want to second guess, and neither was it in our scope to second guess whether those decisions were appropriate at that time or whether, it's unusual. I think that you have to look at the particular facts and circumstances that existed at the time in order to make that evaluation. And that wasn't necessarily a part of our scope to sort of second guess whether they should have issued general obligation bonds as opposed to certificates of obligation for those particular years.
And the last thing, Mr. Mayor, I apologize. Mr. Olson, and I bet you a bag of Jolly Ranchers. You already got 82.5% of this already answered. When will we consult regarding developing and establishing these policies and procedures necessary and appropriate to our internal control? Will we hire a consultant to come in and look at what we're doing based off of what we receive and begin working with us? Or are we able to do it in-house to put these policies and procedures in place immediately?
Well, you are right. We have been working on this since I've gotten here. Maybe before then, but certainly since I've been here. I think I've talked to the council on numerous occasions that we need more policy. We need more firm policy, more policy governance. We have been working on prioritizing the policies that need to be considered and approved by the council. the list of these policy recommendations will go on that list, and we'll go through as a council and prioritize them and take them one at a time and just walk through them. I mean, that's my intent. So we will start dealing with it right away. As soon as the budget's over, I've indicated before, we've got a couple of things. We've talked about our city council protocol, which is our overarching governance policy. We talked about our financial policy, and most of these will be included in our discussion of financial policy, which I think we'll get started on that discussion prior to the end of this calendar year. So they are in the works. They have been in the works for a number of months now. To the other part of the question, I think there's so much work, so much basic work that needs to be done. I think we need to exhaust what we know. We have this study. There are 2 other studies dealing with internal controls that have only been partially implemented. They were done several years ago. I would like to take those and build them into our work plan so that we get caught up with everything we know we need to do before we start talking about outside help. There may come a time when we need to have more detailed outside help, but I think we have plenty to do, and I think we got a year or two's worth of work just to do what we already know we need to do.
And the last thing, I apologize, Mr. Mayor, just got a lot of questions. I did hear, and I apologize to Mr. Locke, because last year we would finish up, and I think he was going back doing some things with this AS400 system. Is this the same system with the SunGuard system, or?
Yes.
So
we are talking about some upgrades now that will go in the FY18 budget that will help us.
All right. Thank you.
Mrs. King.
Thank you, Mr. Mayor. First of all, I'd like to thank you all for this thorough report. I've only been on the council for 4 months and less than that, but it was very informative, and I thank you for that. And as a city council, we requested this audit. We're putting a lot on our new city manager, which there's no doubt in my mind that you are ready to take this on, and you have been. But we have to work with him and with the community to make sure that the community hold us accountable, because the city manager will be doing his job. But we have to work as a team to continue to move forward, as the mayor stated. But once again, I'd like to thank you all. And I'd like to thank the city staff for all you do and you continue to do to move this city in the right direction, our leaders now and also our past leaders. Thank you.
All right. Anybody else? Mrs. Fleming.
Yes, sir. Thank you, Mr. Mayor. Good evening, everyone. I would like to also thank the Houston team for coming up. They worked very hard on this. Like Mrs. Nash said, we requested you guys because we felt there was a need. There was lots of talk about this, that, and the other, so we finally cleared it up.
She needs to turn her mic on.
Your mic's not on.
Oh, and I'm just talking like that.
Need to start over.
Again. Oh, gosh. Good evening, everyone. I just want to say thank you all for coming. A lot of people in the community was concerned. Still can't hear me?
Oh, my goodness, I should be used to this by now. Lots of the community was very much concerned about this audit. And the people that was concerned, I hope they're here tonight. I hope they've gotten the answers they wanted. And the people from Houston, they did an outstanding job. They were here working very hard with the staff. I would like to thank the staff and everyone for working so hard with them. I would like to thank the city council people that came to lots of the audit meetings and everyone that put forth an effort to make this thing work. Mr. Olson has rolled up his sleeve already to get going on these things, and Mr. Mayor and every one of us would like to say that we hope that we can get some clarity now, and we hope everyone in the community is satisfied. And thank you all very much for coming, and I hope everything is settled now. Thank you very much.
Thank you. All right. Anybody? Mr. Rivera.
Well, like everyone else, let me echo, say thank you to every one of you, and I wish you the best when you go back home. But I also would like to take an opportunity to say thank you to the staff, our staff, that did a tremendous job to provide you the information that you all needed. You probably disappointed a lot of people that were looking forward for us to have something wrong in our budget, and I'm afraid that I'm the one who's going to say it. But those who think that we have something wrong in our budget, I hope they could see what we're doing and clear this up once and for all. Thank you.
Thank you. All right, anybody else?
Mr. Mayor, could I ask the question? Is there anyone from the audience that would like to ask the question? I think we need to give them that opportunity, sir. Since they're here, sir, anyone in the audience, if you have a question for the people in Houston, I think we need to give them that opportunity. They're here, they came. Mr. Mayor, is that okay, you and Mr. Olson?
We're not in a public hearing
Could we,
or anything like that.
Ms. Davis, is that okay?
It's not required, it's up to council. It's
Okay.
a little irregular. It's up
But
to-
I would just like
I
to.
think they want to go home.
Well, just one question from somebody. Come on now, stop it.
Yeah. Just any council questions real quick. Mr. Harris.
All right. How are y'all? Glad to see y'all here, and I want to thank you as well, because we spent some time together, a few hours here and there together and everything, talking about all the stuff we've been over and going through. And my only wish is I had gotten this like a week early, so I could have looked over it and wrote questions down, because I could have made some money off of y'all, because I could have put my questions in the book and sold it to y'all on Amazon. But all right, y'all didn't get that. But no. All right, but anyway, let's see. As I listen to things, I listened to a lot of the presentation, and I was hearing a lot of stuff about best policy practices, and I was hearing about and like I said, I guess I'm the one that likes that. I don't just like lick the frosting off the cake, top of the cake, but I like to cut down into it to see if it's fully cooked and what's down in there, and maybe taste it. But when looking at these policies that you said, we have a lack of policies, and we seem to have a whole lot of lack of policies. And even as you said that, even as you said that you found no evidence of fraud or anything, which I'm glad about, one of my concerns is you stated like a few times, multiple times, that there was chances for fraud to go undetected. That concerns me because of a lack of policy. And you want to go ahead and address that? Okay, you can. But as far as it goes, let's see. But let me get some of these questions here. Get back up to the top right here. Okay, now as far as when you talked about the $8 million, okay, you said that was projected, and you said that wasn't really, I guess, a loss. But I have a question for you on that one is, with the raises that occurred, did from what you saw, did we have a plan to was those raises brought up with a short-term view or a long-term view, from what you saw?
Well, I think we indicated in the report and in our presentation just then that there was no long-term planning associated with those raises. Okay, I think that was pretty clear in terms of how we written in the report and what we just presented. So there was a short-term look, but not necessarily a long-term look before adopting it in the budget.
Okay, I just wanted to verify that question. Just ask it again, because sometimes I ask it again just so people can hear it. Let's see, you indicated that, $7.5 million is going to be needed in, did you say the next year or something like that? We're going to look forward to pay for grants that expired?
You will need $7 million by 2021.
By 2021,
And the most
okay.
of that will occur within the next 2 years, and there's a schedule in your report that details out year by year how much you will need.
Okay. Next question, as far as grants, were all the grants utilized correctly as far as y'all can tell?
Yes.
Okay, good. In some instances, was council given enough information to make informed decisions?
I believe not.
Okay. Let's see.
That's in the report.
Yeah. Okay. Let's see. Let's see here. Let's try to figure out which one I want to ask here. Okay, and then you said, that as far as with no capital improvement plan, you said that people were being used, I guess, outside of their recommended job description to perform inspections and so forth.
Let me clarify that.
Yes.
That's not really what we said.
Okay.
What we said was that you had people with construction oversight responsibility that was not their core competency.
Okay.
That's not using people to do inspections. That is oversight. That's an oversight role that a typical PM or a construction manager would have in a particular design build situation. Okay? So you would agree, I think most folks would agree, that a chief of police or a fire chief wouldn't have that kind of core competency to be able to monitor vertical construction from a technical standpoint. So that's what we talked about. That's what we were talking about in the report.
Okay, just wanted to, that's good because somebody else may have been confused about that as well. All right, now when you talked about the retroactive pay increases and you talked about a policy actually being put in place, you said this past August? Or?
This past August, which was last month, we did see a modified policy.
Okay. And as far as the any retroactive pay increase, what is the regular, I guess, state policy or whatever on retroactive pay increases?
State policy is that retroactive pay increases are not allowed unless you have a specific policies that says under what criteria and when you will pay retroactive pay.
Okay, so we did.
Make sure you clarify that. State statute, not policy.
State statute.
State statute, yeah. So we did do that. Okay. Let's see. And then you said that the city does not adequately assess county roads annexation. I see. Okay. Tight. Let's see. Yeah, you got a part that says failure to maintain records according to state records and recommendation policies. I'll just say this. That's this question. And it all comes, I guess it all comes back to our policies, our lack thereof, basically. And as I heard you speak, correct me if I'm wrong, we had a heavy lack of policies in key areas. And even as you said, these lack of policies did give opportunity, not saying it happened, but did give and present opportunities for things to happen that could go undetected. In the end, when you talked about the city growing and experience, I can't help but to wonder myself, even like you stated, whether or not there needs to be a review of staff competency, if you will. And even in my opinion, I think there needs to be, because I do believe that some things that happened, even though policies weren't in place, somebody should have known better. Somebody somewhere in staff should have known better. And because even as you talked about how, we had some accounts that weren't recorded and some bonds, as far as not being able to find some things as far as bonds and so forth, is that, I say that should, like I said, I don't know how much that happens, but at the same time, I don't, really think it should ever happen. But, like I said, but again, like I said,
are you
well,
directing
yeah.
No, what I wanted to say is because you're making things that the city manager is responsible for, staff.
Oh no, I'm just expressing my opinion.
I'm just expressing my opinion. If we can just continue on with the questions.
Questioning? Okay, all right. So I'll just ask this. Okay. In the end, when you talked about, now I want to ask you that question because that'll be kind of. I know that what that'll do. Like I said, all right. I'm finished though. I'm finished. Like I said, I just had concerns, and as far as documents y'all couldn't get. Do y'all believe that if all the documents? Well, I don't. I'm trying to think of how to put that. I just have a concern with the documents y'all didn't get because, But as far as getting all the information, and like I said, I'm not saying anything went right or went wrong, but I still have concerns about stuff that was missing, as far as documents being shredded, so forth, and things like that, and y'all not getting all the information. So, but I will be, soon exercising my right to call for an investigation into that because that wasn't right, though. But that's not nothing to do with y'all. But
well, let me address this issue that we raised about the availability of documents and put it in the proper context. Can you hear me now? Okay. Let me address this issue and put it into the proper context. You have record retention guidelines that you follow associated with the Texas Library and Archives Commission. in the state of Texas. They issue guidance on how and when cities should keep or dispose of information. We're not ready to take the leap that there was nefarious intent with shredding of documents. We're not ready to take that leap right now because as we look at this, we saw that a number of those documents could have been shredded based on the records retention schedule that's implied by the law, that's required by the law. So that's another matter that if you want to deal with internally, but I will say this, that when we make those references about what we didn't get, here's what you have to remember. We're dealing with a 16-year scope period here. You're dealing with a 16-year scope period. You're dealing with a situation in which people have come and gone. They've come and gone. You got different policies that were and practices that could have been in place during those particular periods of time. So there's a number of things here that when you look at a period of time that long, it stands to reason that there may be documents that may not be available. But in those instances in which those documents were not available, what we took great pains to do is what a good inquisitive auditor should do is try to conduct alternate procedures to satisfy ourselves that there may not be a problem. So that's the way we approached this whole scenario, okay? So I wanted to make sure I gave you the proper context.
Oh, yes,
now, anything else, that's an internal matter
Yes, it is.
that you may have to deal with, but that's the way we approached handling the management audit.
Yeah, because I was looking at one of your notes I took here that said failure to maintain records according to state records retention policies, and that's what made me really just think about that there was actually a mention of that, failure to maintain those records. So,
well, we mentioned that because there was an instance in which we didn't have a document that was inside of the records retention period. Okay,
yeah, that's what I'm saying. That's what made me think about the documents as well.
And keep in mind, there was only one instance of that.
Right, right.
So it's hard to take a leap that there was nefarious intent with that.
Okay.
Okay.
Yeah, but I just want but that, like I said, the document thing is internal though. But like I said, I just want to.
Are you done, Mr. Harris?
I'm done, sir.
Thank you. Anybody else? Mr. Oakley.
Yeah, I just want to go back and I think it needs to be said as far as somebody doing something. I believe, as I worked for a little organization for about 20 years, United States Army, corps level, division level, and the thing that was not transient was policies and procedures. So if something didn't get did, is because there was no policy or procedure saying who's responsible for getting it done. So if there's no policy, then the policy is not transient. Policy is in place 20 years from now. So I think it's offensive to say that the staff somehow didn't know, because I think one of the things that's been mentioned was that you have lack of institutional knowledge. Well, why is that? Because people have moved on. But when people move on, policy does not move on, and policy is absent right now. Yeah. So I think it's very, very offensive to say if someone was responsible to do something, because if the policy wasn't there to tell who to do what, then nobody did it. I know that's bad grammar there, but just trying to make a point. All right. Thank you.
All right, so at this time what we're going to do is we're going to move on to DS 17097, and this is manager's response to our audit report. So, no, we're not. Well, I'm sorry, we're not opening it up to the public, ma'am.
Is that a council decision? The council didn't decide. She said the council would have to decide, so we have to take a vote.
Point of order, Mr. Mayor. I asked for a council decision.
Thank you, sir. Let's make it official.
Can we ask the auditors, because it's outside the scope of their contract? Part of the contract was not to entertain a public Q&A session, so I think we should get their input as well.
We don't want to get charged anymore.
Are you going to ask questions to the auditors or just address us?
The mayor, point of order.
Point of order. Point of order. Let's
call for the decision, Mr. Mayor.
All right. All right. Stop.
Mr. Mayor, there's a call for the decision.
All right. All those in favor of her speaking, raise your right hand. All those opposed? Okay. So we got 4 to 3. We're done. Move on. Thank you. That's how you do it. All right. Thank you. All right, Mr. Olson.
Thank you, Mayor. I do have a couple of comments to make from a management standpoint regarding the audit. And the first comment I have is that I'm glad this is drawing to a conclusion. And I do want to thank McConnell and Jones for the professional and thorough work that they've done on this audit. It was an independent review of 15 years of city operations. And it was intended to answer some of the City Council questions regarding past financial and management performance. We now have those answers in the form of their report. The audit produced no evidence of fraud or abuse, which should be a great relief to the council and to the public. The audit also produced, in my count, 26 recommendations for improved city operations, which we appreciate very much. Some of the language in the audit report, I believe, merits some clarification, and that clarification is included in the management response, which is part of the audit report as well. I would draw your attention in three particular areas of the management response. The first one was in Chapter 6 regarding pay increase. We differ with the auditors in some of their interpretation of how that process took place. I'm not going to detail that any further. In Chapter 7, we have a difference of opinion about how the planning for city owner agreements should take place. And that can be developed more fully with the council with policy. At this point, I would just say it's very difficult because city owner agreements are really upsizing agreements. They are done for the city's convenience, not for the developer's convenience. They are intended to save the city future money by having to upsize a line at a future date. And because the developer is the driver of when they're going to develop properties, we can't always plan what they're going to do. So the planning process there, I think, needs more discussion, more conversation. And then on Chapter 8, on roadways, again, I think we just need more discussion and a more complete disclosure amongst the council with our policy discussion about how roads are received and improved. And indeed, we have a general road problem. It's not just a specific road problem to those roads that we've annexed as part of an annexation or taken responsibility for. It is a general road problem that extends to all roads inside of our jurisdiction. So we make some comments in our management response that addresses some of those issues. Some of the report is written in the present tense. But conditions that were examined stretch over a 15-year period. And I think this comes back to the discussion you were just now having a moment ago. The decisions that were made 15 years ago are not necessarily the decisions that would be made today. The conditions 15 years ago are not the conditions today, and the people 15 years ago, or 10 years ago, or 5 years ago, are not the same people that are here today. So I think there needs to be some consideration when you read the report to put in perspective the tense of the language being used in the report. Some of that language talks about the city does this or is doing this, when in fact the city was doing that years ago and may not be doing it today. So I think you need to have the context of that particular thing. And I'll give you some examples of some of those conditions. Recognizing the need for better policy governance, we've been working on a better policy framework now for about 6 months. And I've been telling the council individually and publicly and privately, that we need to have a better development of policy. I couldn't agree more with the audit recommendations in those areas. We've recognized the need for better capital improvements planning, and we've been working on a capital improvements plan, and I have a target date of the 1st of January to begin sharing the details of that plan with the City Council. We've recognized the need for better general planning, and we proposed in the FY18 budget that we enhance the resources and the capability of our planning department. We've recognized the need for better information going to the City Council. And since the first day I came on the job here, we have been training staff, improving our staff report process, practicing our presentation skills, all in an effort to make sure that the council gets the information you need as you make those decisions. It is clear from our budgeting process this year that our city finances are challenging, and they have been for several years. These audit results provide assurance that malfeasance was not and is not the reason for that stress. We are not unique in these challenges. Indeed, most cities have to make hard decisions about balancing their budgets. Like every other successful city, we will resolve our financial challenges through good decision-making and fiscal discipline. At the council direction, McConnell and Jones was hired to explore 7 specific areas of concern. As they presented that information this evening, in each of those areas, the auditors found facts, they drew conclusions, and they made recommendations to the council. As is typical with this type of an audit, city management reviewed and responded to each of those 7 areas. For the most part, management agrees with both their findings and their recommendations. There are a few exceptions, and those exceptions are noted in our management response. The entire audit, including the management response, is now posted on our website and is available for public review. I encourage everyone to go read the report and get a complete understanding of both the audit report and the management response. So, the audit is now complete. The next question is, now what? I've been pondering that question for a period of time, and as I've done that, I continue to have a biblical image in my mind. And that image is of a character named Lot, who was trying to get away from the imminent destruction of his city. He, his wife, and his daughters were leaving their city. Lot and his 2 daughters kept their vision on what was in front of them. Lot's wife, on the other hand, kept looking backwards. And her reward was she got turned into a pillar of salt. And Lot's reward was that he had a productive future. So, as we move forward into the next fiscal year, I intend to create a citywide business plan focused on a productive future. Included in that business plan will be goals and accountability that includes all of the 26 recommendations from this audit and every other function that we need to pay attention to. I do believe that it's time to follow Lot's example and look forward, not backward. After this audit, I see no value in continuing to look backwards. It's time to look forwards, and I intend to do everything in my power to work for a positive future for the city of Killeen. That's all my comments.
All right, thank you. Thank you, Mr. City Manager. And council, with that was our last item, so we just need a motion to adjourn.
Second.
Motion to adjourn by Mr. Kilpatrick, second by Mr. Rivera. All those in favor of adjourning, just say aye. Aye. All right, thank you for coming. We are done.